European bank stocks slump on Wednesday with embattled Credit Suisse tumbling as much as 30% to another record low on renewed investor concerns about stresses with the sector triggered by Silicon Valley Bank sudden collapse. Regulators and financial executives around the world have sought to assuage contagion fears after tech-focused lender SVB and another US bank failed last week, but worries persist. The drop in Credit Suisse shares led 7% fall in the European banking index SX7P, while 5-year credit default swaps CDS for the flagship Swiss bank hit a new record high, highlighting increasing investor concerns. Europe's bank index has seen more than 120 billion euros evaporate in value since March 8th. Markets are wild. We move from problems of American banks to those of European banks. First of all, Credit Suisse, said Carla Fancini, head of institutional clients and bank in Figest in Milan. The Swiss National Bank declined to comment on Switzerland's second largest bank after its largest investor said it could not provide Credit Suisse with more financial assistance because of regulatory constraints. Germany's Financial Supervisory Authority, BaFin, said it saw no direct risk of contagion, and the German banking system appeared robust and capable of digesting higher interest rates. Our main focus is currently on some smaller bank with little surplus capital and increased interest rates risks. We are closely monitoring this institution, BaFin spokesperson said in statement. Big US banks such JP Morgan Chase, Citigroup and Bank of America slid between 3.5 and 5.5%. BlackRock Chief Executive Lawrence Fink warned that on Wednesday that the US regional banking sector remained at risk and predicted further high inflation and rate increases. In the United States, the focus is shifting to the possibility of higher regulation of banks, particularly mid-tier ones such as SVB and New York-based Signature Bank, whose collapse triggered the market tumult. Moody's Investor Service on Tuesday revised the outlook on the US banking system to negative from stable, citing heightened risks for the sector. SVB shutdown prompted President Joe Biden assurances that the US financial system is safe and emergency steps giving banks access to more funding. In Britain, HSBC top bosses called the employees at SVB rescued UK arm to assure clients their deposits are safe and loans are supported, as the progress of integration following its takeover began, a memo from the bank showed. And in an attempt to avert similar crises down the line, the US Federal Reserve is considering tougher rules and oversight for mid-sized banks similar to those to SVB. Earlier, Tokyo Stock Exchange Bank Index jumped more than 4% after 3 straight days of heavy selling. Investors have been particularly concerned about the huge bond holdings of Japan lenders, but Japanese Finance Minister Sunichi Suzuki said differences in the structure of deposits meant local banks would not face incidents similar to SVB.